Good morning, everybody. This is Matador from freetradingvideos.com. It's Wednesday, October 21st. It's about 9 o'clock a.m. and we're seeing a bit of a gap down sell-off and then a fill of that gap pre-market. And here we are at 109 again. Seems to be our little go-to number here as we keep testing 110 over and over. But I'll be watching this number extremely carefully today. In addition, our previous swing low, just looking at a 15-minute chart of the S&P 500 ETF. So right through here we saw a nice swing low, tested again, and pre-market that just got tested for a third time. And it's a perfect gap fill to the post-market data from a few days ago, and the 108.60 area. If you zoom out on that, we're still looking at this area of high base, so we're holding up in this little pre-market sell-off. Needs to be taken in context if you're looking at a larger time frame. So 109 is right through here, the same line. That's where we kind of gap down, and that looks kind of tiny. But still, moreover, if we sell off from here, that'll be a lower swing high. This will be a head and shoulders pattern, where you've got a shoulder over here, of course. You've got the head. Very nice test of the 110 mark. And if we sold off from here, that head and shoulders pattern, I'll be watching the rising 50 MA. I'll be watching this number, the 108.30 number, which has been tested once, twice. You know, nice support at this level, but break of the 50 MA along with that number could yield some downside fill to the complete gap, and then I'll be looking at 107. So those are my support areas on the way down. You already know that we're facing resistance at the 110 mark. We've talked about that for several days in a row and why it's so dangerous to go long abjectly right into the face of that without at least a brief stall, which we have now, but things are starting to loosen up just a little bit. So here we are. If we closed right now for the week, that'd be a perfect test of our overhead resistance of this area. So I like to see the markets quote-unquote following the rules. Yesterday into the close, let me just grab a 15-minute chart here so we can see it. And I'm going to get rid of the pre and post-market data so we can take a look at the tick and the TRIN a little bit more effectively. So here is the TRIN reading from yesterday, and marching higher all day long into the 1.6 mark. It sort of portends a sell-off, and that's what we saw this morning so far. The TRIN Q, not quite corroborating that. In fact, a little blip down to the 0.84 area. We'll look at why in a minute. The VIX, good tiebreaker very often. Beautiful sell-off to below the $21 mark. So that's fairly impressive to see a volatility bleed on a day that the TRIN was marching higher. So again, looking at that sideways, let's take a look at how Apple closed. And that's a beautiful high base consolidation after a gap up. Huge unfilled gap. Not a lot of people taking profits from that. Anybody who is already long down here on a big gap up gets pretty interested in taking some money off the table, and typically that's why a lot of gaps fill. But in this scenario, not a lot of profit taking went on, even at the $200 mark. So let's look at what's going on pre-market with him. Hang on one second. And it's still a consolidation. So very good. We'll see how that affects the markets. It's probably already digested nicely, and it just exists again in that sphere of influence like it was before. So good job, everybody. Hope you're having a great week so far. It's fun working with you, and talk to you soon, probably around noon Eastern Standard Time, and then you can stay tuned for D7's video at the close.